Check, please.
Welcome back. We're going to revisit Cisco again today. We will look at the stock prices, the financials, and use the stock analyzer tool, what you should be paying for this company moving forward. This was a no-brainer. You must buy this. It's going to the moon in the year 2000, the first trillion-dollar company. Spoiler alert, it never got anywhere near that, and we'll show you why. Paul and Mo own and operate over $100 million in assets. I bring your questions to them about this company and what you should be paying for it. Paul, give us your thoughts on Cisco.
Thank you very much, Seth. Guys, follow us on our new Instagram account, Everything Money Investing. It's growing like crazy. And also follow Seth, Mo, and I on our personal accounts because it makes us feel warm and fuzzy when we get extra followers.
You were an extra in the Thong Song video. You remember?
I was.
Yeah, like look in the opening when they're like at the pool.
I don't remember. Were they in the desert in the Thong Song?
Well, maybe it was Palm Springs.
Well,
but
are we allowed to pull up the Thong Song video, or is that going to involve?
Instantly, they'll get killed. But Paul was.
It will?
Yes, the whole video will get shot. But Paul was an extra. If you squint, look deep, he's in the first opening scene.
You'll squint and look at a lot of things for me. All right, so guys, Cisco. We're going to look at Cisco now. So let's go to our 8 pillars tool and our
Paul,
software.
You're jumping. You got to look at the chart, baby.
Oh, I'm going to go to see that.
Yeah,
I'm not jumping anything. I'm just pulling it up.
You gotta look at the chart, bro.
Guys, pull up the max chart. All right, guys. Cisco. This is the year 2000. It was $80 a share. It has not reached that point since then. So, all these hype YouTubers, if you believe in hype, you're probably too young. If you're still sitting there saying, no, it's different, you're too young to remember this. And I'm fine with that. But just remember, guys, Cisco 22 years ago, hit $80 a share. The world was its oyster. It had nowhere to go but up. It is now less than that. But let's just jump ahead real quick to the income statement. Last year, Cisco did $51 billion in revenue. In 2000, it did $21 billion. So 2.5 times larger. In 2000, it generated $3 billion in profit. Last year, it generated $11 billion. So if I told you that at this point right here, that revenue would go up 2.5 times and profit would go up almost 4 times, but the stock would go nowhere, you just said I was crazy. You don't get it, Paul. You're stupid. You don't get it, Paul. You're stupid. Oh, I'm stupid, but I'm rich and you're broke and I don't care about you.
Oh.
Was that mean? Was that mean? So guys, remember that you can overpay for hype. Why are you guys laughing? Listen, I get mean. When people tell me I'm stupid and then end up being right, I'm a really, really mean person. Because I just look at it going, this is obvious to me. And guess what? If you were right on Cisco, like Amazon's now 3,600. At the peak of the internet bubble, it was 115. Oh, look, Paul, you were wrong. No, I wasn't. It went from 115 to 6.
The love fest between Wall Street and Cisco reached an all-time high today. It reported 53% gain in revenue.
What date is that?
February 9th, 2000. The results, the shares ended at $125.
Wait, what? Oh, it's showing 80 here. It must have hit intraday or something like that.
It might have been a split. Yeah, maybe.
No, it has nothing to do with split. Split would be adjusted here.
It rose as high as $133. Bless you.
Isn't that incredible? So guys, again, if you think that just because the company keeps going up and revenue goes up, you can overpay for growth. Just remember that. You can still overpay. That's what happened at Cisco.
And surprise, Paul, the company, this was bad. So since going public in February 1990, so this is a 10-year-old article, it had stock splits 9 times in its first 10 years.
Jesus Christ.
Sound like a little company you know of that,
I do know that
keeps going high and then splitting down so it sounds cheap.
He's talking about Tesla, guys. He's talking about Tesla.
Keep going, man. This is incredible.
All right, so guys, let's do our 8-pillar analysis. First pillar, we want the 5-year PE less than 22.5. It's 29.55. Wow. So that's an X. Pillar number 2, we want the 5-year return on invested capital greater than 9%. It is 20%. That's a check mark. Now, guys, the dividend yield, 2.4% pays out $6.2 billion. Don't get suckered into believing that a dividend is safe just because they're paying it. They can pay it by issuing shares, by taking on debt. You compare it to the free cash flow. In the last 5 years, they've averaged $14.2 billion in free cash flow. Paying out $6 seems pretty safe. Pillar number 3, we want revenue growth over the last 5 years. So we go to our income statement. 5 years ago, they did $47.8 billion, and last year they did $50.8. Barely any growth, but it's still a check mark nonetheless. Pillar number 4, we want net income growth over the last 5 years. 5 years ago, it did 9.7 billion in profit. Last year, it did 11.4. Check mark there. And look at this big drop right here, 1.3. I guarantee there was a write-off here, but that's probably skewing the 5-year PE just a little bit. Actually, I don't see the write-off. Interesting.
Gosh, I didn't know this, Paul. In March 2020, Cisco's market cap of $570 billion made it the most valuable company on Earth.
In March of 2000, not 2020.
Oh, yeah, 2000.
Guys,
yeah.
yes, it was the most valuable company in the world at that point.
Look at it now.
And now its market cap is, what was the market cap again?
$570 billion.
Right now?
No, 20 years ago.
That's what I mean, 258 now. So if I told you 22 years ago, in 2 months, that the market cap would have gone from 570 down to less than half, you'd have been like, you are absolutely stupid, you old loser. You're an idiot. You don't get it. These YouTubers who are 12 years old and have green hair, they get it.
They IPO'd at $224 million. Oh my gosh, sorry. It's all over the place, man. These numbers are just mind-boggling. Keep going.
All right. Pillar number 5, guys. We want shares outstanding staying the same or decreasing. Remember, guys, if a company has 10 shares and you own one of them, you own 10% of the business. They buy back 2 shares. You still own that 1 share, but now it's out of 8 shares. You now own 12.5% of the business. So they have rewarded you by staying with the company by decreasing the number of shares. So we go back. We actually go to the 6th year. The end of the 6th year is 5.03 billion shares. Now it has 4.22. That's a check mark. So they've bought back about 15 or 16% of their shares. Awesome. Pillar number 6 involves debt. So we go back to the main page. We want to look at how their debt looks because just like your personal life, more debt is riskier for a business. So we take the 5-year average free cash flow. We multiply that by 5. So 14.2 times 5 is $71 billion. So we want their total long-term liabilities less than $71 billion. So we go to the balance sheet on our software. We scroll all the way to the bottom, and we have $30 billion. That's it. In fact, their total liability is only $53 billion. So they can pay off their entire, they're sitting pretty. This is very good. Massive check mark there. Now, pillars 7 and 8 have to do with free cash flow. Free cash flow is cash from operations less your capital expenditures. You can do one of 5 things with free cash flow. You can pay dividends, buy back shares, pay down debt, make acquisitions, and reinvest back in yourself. And we make this very easy for you with our software. We added the free cash flow line here. 5 years ago, they did 13.37. Last year, 14.14. Check mark there. Our final metric. We take the 5-year average free cash flow, we multiply it by 20. It's a starting point for a market cap we want to pay for the company. 14.2 times 20 is $284 billion. What's the actual market cap?
258.
258. That's a check mark, guys. I believe this is an 8-pillar thriller. What do you think? Is it? Well, guys, let's go to the 8 pillars tab. Oh, no, we have the 5-year PE. That was right. So guys, apart from this PE, it looks pretty decent. Now, does this mean we buy the company? No. We have to sit there and use our stock analyzer tool. This has been the most popular part of our website. Every investment is the present value of all future cash flow, but we don't know the future. So we have to make assumptions about it. The stock analyzer tool takes your assumptions and gives you a price to pay for the stock today. Because remember, guys, once you buy a stock at a price, you can never change that price. Yes, you can sell it and buy it at a different price, but once you've made an acquisition, that's the price you've paid. That's your investment in it. So let's go to the stock analyzer tool. Seth, you finding anything else exciting about the company?
You know, I forgot this old article from February 2000. It said, you know, we've never talked about the T word for a company, trillion, and that this could be the first $1 trillion company. We must start contemplating the possibility of Cisco being the first $1 trillion company, and it never. But
you're seeing these articles, and there's a lot of hype around it, right?
Yeah, this article is about that, like value investing, shares soaring.
Value investing?
Well, by the end of it, he says, this guy actually says, be cautious, you know.
Oh, who is it?
Some guy named Tom Petruno from the LA Times.
Wow.
Yeah.
That's impressive. That was probably not very likely. But guys, it just goes to show that even during hype times, there are value investors who say, hey, listen, be cautious here. This doesn't make much sense.
The fact that, tell me if this sounds familiar. The fact that this market has confounded historical rules for so long makes it all scarier. When you fly around a black hole, we're told the usual laws of physics don't apply, Paul. This time is different. I mean,
By the way, you know what you can do? You can take that statement. You could apply it to 1928, 1966, all these things don't matter. 2000, 2020, real estate in 2005, Bitcoin, all these things. Oh, by the way, you hear Walmart's creating its own crypto now?
Of course. What are they calling it? Wallcoin?
I have no idea.
Martcoin. CoinMart.
CoinMart?
I got all the ideas, Paul.
You are an idea maker.
But I guess in the end, Paul, when you talk about this, I simply look at, we got two options. I see the YouTubers, guys who, they don't seem like they own a business. They don't actually have that much money invested versus someone like yourself.
Well, I don't think even having the money invested is really... Listen, I have more money than Gary Mashuras, but he's a better investor than me. Because he has a better process. I don't care if you have $1,000 or $1 billion. If you have a smart process, there are Kathy Wood's got more money than me.
Yeah.
She's a moron. She's an absolute moron. Like literally, I don't understand how she has any money. She's really, really stupid.
Well, it's dwindling on the daily, so
it is dwindling. And she's like, "Oh, I feel your pain." I'm like, "Okay." And now all of a sudden, she cares about the long term.
Tell me about the stock analyzer.
Okay, guys. So, stock analyzer tool. I'm doing a 10-year analysis. First things first. I'm gonna do revenue growth numbers. I'm gonna do negative 0.5%, 0 and 0.5 positive. Profit margin. I'm gonna do 17, 18, and 19%. Free cash flow margin, I'm going to do 26, 27, and 28%. PE, 13, 15, 17. Price to free cash flow, same thing. Why? It's not a fast-growing company, so you shouldn't pay a premium for it. A fast-growing company with a lot of growth potential, pay a premium. I've heard about comments where people say the stock analyzer tool doesn't work for growth companies. 1,000,000% wrong. 1,000,000% wrong. If you believe that, you are stupid. So, hit the analyze button. Scroll to the bottom. It's just expensive, guys. Low price, 18 to 28. High price, 25 to 37. Somewhere in the middle, somewhere in the 20s. So it's just expensive right now because of the growth potential. There's not much growth potential. Now, let's say we go and change this. Let's say we change the growth potential to 2, 3, and 4% a year revenue growth. It's still not making sense. Low side, high side. 22 to 34 so basically 22 to 48 bucks, somewhere in that range. Guys, it's all about the revenue growth potential of the company. If there's a lot of revenue growth potential, you should pay more for it. If there isn't, you should not. And I don't know the future of Cisco is that much greater. Now, granted, there's a lot of inflation happening, so maybe that can justify a much higher price. But that's where I stand on Cisco. My goal is to be conservative and buy the few companies that have 10,000 that fit my conservative estimations.
Yeah, the brokerage... First Boston suggested everyone should stop being so small-minded. Analyst Paul Weinstein declared that Cisco is on track to top Microsoft for the next few years and become the first company with a market value exceeding $1 trillion. And all they had to do was double at that point. And sure enough...
It seemed obvious, didn't it?
Yeah.
It seemed obvious going to happen. Don't be so small-minded. Gee, I wonder who else tells me that now. Don't be so small-minded. Well, I'd rather be small-minded with a growing bank account than open to a lot of things and not understanding value. That's just it.
If you're interested in getting the software behind Paul, you can have this on your phone right now. You can look at the numbers, the financials. You can show your friends and family what you're investing in and not be so much in the dark and alone out there. Paul, tell them how they can get this.
And the reason we created all this software is because as we made videos of the company, people would reach out to us and say, hey, how do I analyze my own companies in order to do the analysis versus waiting for you guys to make a video? So we created the software. You get everything you saw here. You get everything on the main page that's also coming soon, right here to the right side. You get 30 years of financial data. You get access to Seth Moe and I in our exclusive Everything Money chat here at the top, EM Community Chat. You get the Stock Analyzer tool. You get Real Estate Calculator, Retirement Calculator. You get 8-pillar portfolios, which allows you to put up to 50 stocks in a portfolio to tell you how all 50 companies do at once, or 20 companies, doesn't matter. But exclusive daily content. We make 1 to 3 videos a day that we post. They're called A Few Good Minutes. They're wonderful. Seth Moe and I make them. But most importantly, guys, is this EM community. We have over 6,000 people that constantly talk in the community about their investment ideas. Because the great thing about the internet is it allows all of us who have a certain way of thinking to come together and talk about our investment ideas. We have people in there saying, hey, I'm looking at blah, blah, blah. I'm looking at Ford stock. What do you guys think? And people have a good, engaging conversation about it. This is all available, all in our tool, all of this for about $1 per day. Sign up now. $1 per day gets you all of this. For the price of a cup of coffee, you get all of this, $1 per day. Sign up. And the best part is, whatever you sign up for today, that's your price that's locked in because the price goes up every single month. But you're locked in at the price you sign up for today. So $1 a day gets you all of this. No-brainer, guys.
And that is our take on Cisco. We will keep you updated. An interesting company, a grand fall from grace. And yeah, it's just mind-boggling. But I know we talk about the past so much, and we'll probably see this repeated very soon. So stay with us. We'll be here. Final thumbs up. See you next video.